Looking at recent data, the performance of the German economy is still commendable, despite the considerable headwinds it has faced since Europe's debt turmoil began, and with resilient exports helping to be one of the main drivers of growth. But can Germany still hold on to this momentum? Stefan Schneider, the Chief International Economist at Deutsche Bank Research, joins me now on the phone from Frankfurt to discuss this. Stefan, can Germany hold on to this momentum and also help lead the Eurozone back to growth, even if the crisis intensifies? Also, how can Germany in some ways guard itself against the risks to its recovery?
No, we don't think that Germany will remain the island of the blessed, so to say. We had quite some strong growth in the first quarter of the year with 0.5 quarter-on-quarter increase in GDP. But the more recent indicators, especially the industrial service like the PMI or the IFO index, really show quite a substantial deceleration, also from the external side, which has also to do with some strange movements in export and import prices. So overall, we think that from Q2 onwards, the German numbers will be much, much softer, and that we'll have just barely growth in Germany for the remainder of the year, which will lead us to a GDP increase for the year as a whole of around 0.8, which is still considerably better than the Eurozone as a whole, which will shrink by around 0.5%. And if you exclude Germany, then actually the shrinkage of the Eurozone would be around 1%. I guess some of the hopes that actually Germany can pull the other peripheral countries from the Eurozone out of their recessions, I think that they are misguided. If you look at the trade links, even if Germany started to increase its imports substantially, that would only benefit to a very minor extent those countries like, for example, Portugal or Greece.
What about this divided ridge that continues to grow between Germany and even Finland, with other EU nations like France, Italy and Spain? Strain continues to show in the German-Franco ties in regards to how to solve the crisis and whose save the euro policies are the best solution. Is this friction still likely to continue?
Yeah, I mean, it has two aspects. The first one, I guess, is the economic performance. And there we see that, the reforms which Germany underwent in the last decade actually are paying off. And, they might make the same point with regard to Finland. And so growth is relatively robust, whereas it now becomes more and more evident that many of the other countries, and it's not only Italy or Spain, you mentioned France, that part of their strong growth numbers before the crisis were due to increasing property prices and some kind of build-up of imbalances in the private sector. So, ultimately those countries have to reform in order to basically restore their growth performance. And obviously that's part of the friction that Germany is saying, okay, you have to do your homework. The German political elite is saying, yes, you have to do your homework, you have to reform your countries, and we can see that it's a very gradual process, as we are currently seeing, for example, in France, where Mr. Hollande is very, very carefully in starting this reform process.
What about Germany's banking system? As the IMF too recently noted, the country's banking sector still remains vulnerable to a number of external shocks, doesn't it?
Yeah, which banking sector doesn't or isn't right now? Obviously, when you come up with horror scenarios with regard to the Eurozone, one has to say that German banks are also well integrated into the Eurozone, so they would obviously be affected quite substantially. But I think overall, if you look at the problems which we have in the peripheral countries, that we see deposit withdrawal and things like that, and the fact that some banks in the periphery have no chance to refinance themselves except going to the ECB. I think if you compare to that situation, the situation of German banks, you would say that they are still in a much better shape. Obviously, more can be done in terms of your capital ratios and things like that, but I think currently, considering the circumstances, I think the banking system is on the right way.
Moving on to discuss the bond market briefly, Stefan, what about current German bond yields?
They're still obviously benefiting from flight to quality and from reoccurring concerns about the future of the Eurozone. but the outlook pretty much depends on how the development in the Eurozone is going to pan out, whether towards the end of the year markets will be convinced that the Eurozone will stay together and that there is some kind of takeover of guarantees and debt of the peripheral countries by the core countries, and then this outlook for further stability and for some transfer of fiscal burden should mean that probably the flight to quality flows will reverse themselves. So we might see that bond yields might increase going into 2013. But overall, given that the economic performance in the Eurozone will remain relatively modest, I mean, the Eurozone overall will probably just manage to escape from recession in 2013, given that the ECB is seeing that environment, that inflation pressures are easing and that monetary policy will stay loose throughout 2013. I think any kind of setback in bond yields will be very, very limited.
Stefan, thank you very much again for sharing your outlook on the German economy on DukascopyTV. Now, also coming up on DukascopyTV is an interview with my colleague Monica Gibson on gold, another edition of Targets in Focus, and a press review with my colleague Navjeet Garul. So plenty to keep you updated and informed, but for the moment, goodbye.